Welcome back to Investing Talk Podcast.
Today we're looking at energy fuels, trading under the ticker UUU. The big question we're tackling is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show.
Yeah, definitely helps us out.
And if there's a specific company you want us to look into, leave it in the comments below. We love taking your suggestions right into our source material.
So let's get into the analysis of energy fuels.
Okay.
The entire investment case, it really hinges on the idea that they are far more than just, a typical uranium miner.
Right.
Yes, they are North America's largest uranium producer, and they are a leading vanadium supplier. That's true.
But that's not the whole story.
Not anymore. Their identity today, it's really built around their expansion into rare earth processing.
Ah, okay. That's the competitive advantage, the moat that keeps getting brought up.
Exactly. It's this pivot. They're becoming a critical materials powerhouse.
So not just riding the nuclear wave.
No, much broader. They're setting themselves up as a fundamental supplier for the entire clean energy transition.
Okay, but how does being a uranium miner actually help them in the rare earth space? That synergy. That seems key.
That is the genuine insight here, and it's crucial for you to understand. They own the White Mesa Mill in Utah.
Right.
Now, this facility is already licensed for specialized chemical processing for uranium.
Okay.
But they realized they could repurpose that existing infrastructure, their ponds, processing gear, their permits, to handle rare earth separation too.
Oh, interesting. So instead of a newcomer having to spend billions and maybe a decade building something new.
Right, from scratch.
Energy fuels can just kind of bolt this capability onto what they already have.
Basically, yes.
Yeah.
It dramatically minimizes their capital expenditure, their CapEx.
Makes sense.
And drastically reduces the timeline to actually bring rare earth production online. It transforms it.
From just a miner.
Into a strategic processor, creating this unique multi-resource moat that, few others in North America can really match.
And that potential is what the market's pricing in now.
That's it.
Which brings us, immediately to that financial paradox. It just jumps out. You see the narrative, critical materials, national security, essential infrastructure. It all sounds great.
Yep.
And then you look at the numbers. The current market cap, it's a massive $4.74 billion. Huge figure.
It is. But the reality on the ground, the trailing 12-month TTM revenue is remarkably modest.
How modest?
Just $65.08 million.
Wow. Okay, that gap.
That gulf tells you everything you need to know, really.
It's trading purely on hope.
Purely on the hope of massive, successful future execution, especially in rare earths, not on current operational revenue.
Right. It's the classic growth at any cost strategy.
Yeah.
And the cost is, it's very visible on their income statement.
You see it right there. They are spending heavily to build this future revenue stream.
Which explains the loss.
Exactly. That's why we see the TTM net income as a negative $93.1 million. It's a significant loss.
Which translates to?
An earnings per share, TTM, of negative $0.48.
Okay. So every dollar they generate.
And a lot more they raise.
Right.
Is going straight into capital projects, into expansion.
No dividends there.
Zero dividend declared. They are absolutely in a phase of accumulation and building, not distribution.
And yet, despite these heavy strategic losses, they just convinced the market to give them a massive pile of cash.
That's the real vote of confidence, isn't it?
Seems like it.
They just successfully closed a colossal $700 million upsized convertible senior notes offering. That was early October 2025.
And that's not just standard debt.
No. It's a specialized financing tool. It signals immense market faith in their long-term potential.
Okay, now let's unpack that for a second. Convertible senior notes. Sounds complicated.
A bit.
What does that actually mean for you, the shareholder or potential shareholder?
Okay, basically, it means the people holding that debt can eventually swap those notes for shares of stock.
Ah.
So this lets Energy Fuels keep its current cash interest payments low right now, which is good.
But there's always a but.
There's always a but. It introduces a huge potential headwind. Dilution.
Dilution. So you're saying it's like a ticking time bomb.
Potentially, yeah.
Yeah.
Management has to basically outrun that future dilution.
How?
By ramping up those profitable rare earth and uranium revenues fast, really fast.
And if they don't?
But if they don't, when those notes convert, the outstanding share count goes up significantly.
And your slice of the profit pie gets smaller.
Precisely. It's a high-stakes trade-off.
Okay.
However, the good news is They seem to have the balance sheet strength to maneuver.
Their existing debt.
Reported as low, yeah. Which gave them the flexibility to actually take on this $700 million expansion funding without creating immediate solvency worries.
All right, let's shift away from the spreadsheets for a bit. Let's look at the charts. Because this high-flying narrative, it's showing up directly in the technical momentum, right?
Oh, absolutely. The technical picture is currently, well, screaming bullish.
Oh, so.
The stock is in a definitive, strong uptrend. You see those higher lows and higher highs. Classic pattern.
And the moving averages.
That long-term momentum is undeniable there. The price separation is massive. The current price, it's around $20.51.
Correct.
That's sitting well above the 50-day simple moving average, which is $16.62.
Okay.
But more tellingly, it's miles above the 200-day SMA. That's way down near $8.43.
Wow, that spread is critical.
Yeah. When the price is so far above that 200-day average,
It tells you what?
it tells you this is currently a momentum-driven trade. It's heavily reliant on sustained sentiment, aggressive buying.
Not just institutions slowly accumulating based on value.
Exactly, not just based on quarterly reports.
And the overall technical signal.
They support this. The consensus labels it a strong buy. I think it's clocking in 9 buy signals.
Volatility. We have to talk about the volatility.
We do. The stock's high beta is a major risk factor here.
Yes. The beta is 2.21. So for you listening, that means if the S&P 500 moves up 1%.
Energy fuels theoretically moves up 2.21%.
But the flip side.
Right. Conversely, if the overall market sneezes, energy fuels could get pneumonia.
Yeah. This is definitely not a stock for the faint of heart.
No. You need a strong stomach for that kind of movement.
And that volatility is exactly why the immediate catalyst is so important.
Absolutely. All investor attention is laser-focused right now.
On the earnings.
On the Q3 2025 earnings release and conference call, scheduled for November 6, 2025.
Okay, so that's just around the corner. This is the moment of truth then.
Pretty much. Analysts are predicting strong year-over-year growth, especially on the operational side.
Like uranium output, rare earth milestones.
Exactly. A significant beat here. It could absolutely trigger a breakout past these current high levels.
And here's where it gets tricky, right? The market dissonance.
This is perhaps the most important detail for you to grasp.
Go on.
The analyst consensus is a strong buy. Shows long-term confidence.
Okay.
Yet their price targets for 2025 range from $14.95 to $16.19.
Wait, hang on. So the stock is trading at $20.51 right now.
Yep.
Well above the highest analyst target.
Exactly.
Yeah.
The market has already factored in and arguably exceeded the success that analysts think they'll achieve by year-end.
Wow. Okay, that's a massive tension point.
Huge. If that Q3 earnings report isn't absolutely spectacular,
Or if guidance disappoints just a little.
that rapid profit-taking we talked about, it could trigger a massive correction back down towards those consensus targets.
So it makes that November 6th call almost a binary event for short-term traders.
It really does. It's not just about doing well, it's about absolutely crushing expectations.
Okay. Speaking of doing well, operationally, have they been delivering?
On their core uranium assets, yes. That provides some, bedrock for the story.
Like the Pinyon Plain mine.
Right, that one, for example. It's continuing to outperform initial production forecasts.
Which is good timing.
Very good timing. It solidifies their position as a leading domestic U.S. uranium producer right when geopolitical tensions make energy independence so critical.
And the expansion side, the rare earth pivot needs execution.
That seems to be moving forward aggressively, too. They're actively advancing the Donald Rare Earth project in Australia.
Australia, okay.
Yeah, reinforces their global supply chain strategy. So they aren't relying solely on domestic resources for their critical material feedstocks.
Yet, despite this positive operational momentum, investor sentiment is all over the place.
Incredibly erratic. We saw this clearly in late October.
What happened?
Shares shot up 7.7% on optimism one day,
Okay.
only to tumble a massive 13% shortly after, just on broader market profit-taking and rebalancing.
It's the 2.21 beta in action.
That's it exactly, and it highlights the diverging institutional opinions.
How so?
Well, we saw conflicting signals back in August, too. There was significant insider selling,
Oh, how much?
totaling about $5.5 million. When management and board members sell, that always raises a bit of a red flag for you, the investor.
Yeah, it looks like management is taking profits off the table while enthusiasm is peaking.
Right.
Why do that if the future's so bright?
Well, it might simply be diversification or exercising options, standard stuff.
Possibly.
But concurrently, hedge funds were increasing their stakes.
Ah, okay, so the big money is split.
Fundamentally split, yeah. Some are cycling out, maybe realizing gains. Others are accumulating,
Betting on the long term.
believing in that inevitable, massive, long-term macro play tied to rare earths, the nuclear resurgence. It's a fascinating tug-of-war.
Okay, let's wrap this up. Let's clearly outline the risks and then maybe touch on that speculative buzz keeping the momentum going.
Sounds good.
So, Sarah, what are the main downsides you need to accept if you're buying a stock like this?
Okay, well, aside from the high beta and the extreme volatility, which we've established, requires that strong stomach. The risk profile is really defined by those persistent negative earnings. They're losing money right now.
And reliance on commodity prices.
Absolutely. Reliance on volatile commodity prices across 3 distinct areas.
Yeah.
Uranium, vanadium, and rare earths.
So a slump in any of those.
Any significant sustained slump could potentially derail their expansion timetable and make that $700 million convertible notes offering look very expensive in hindsight.
Yeah. It's the definition of a high-risk, high-reward growth stock in a volatile sector.
Textbook definition.
But the upside potential, that blue sky scenario, that's what makes the $4.74 billion valuation sort of palatable to buyers, right?
That's the carrot.
So what's the speculative buzz driving that? What are the rumors?
Okay, the rumors circulating are high impact and incredibly juicy, frankly.
Like what?
The biggest one concerns new rare earth partnerships. We're hearing unconfirmed chatter, just whispers about major EV supply chain companies.
EV companies, like automakers.
Battery makers.
Think large automakers or battery manufacturers, being in discussions with energy fuels. Wow, that would be a game changer. Why would an EV company be so interested?
Because they are desperate, absolutely desperate, to bypass the China-dominated rare earth supply chain.
Right, the geopolitical risk.
Exactly. A single contract of that size, securing North American supply of crucial materials like, say, neodymium or praseodymium.
What would that do?
It could instantly validate the entire rare earth expansion strategy and the valuation. It would shift UUU's narrative from potential to established player overnight.
Okay. And within their core business, uranium.
Yeah, there's chatter there too about consolidating their uranium leadership.
Any acquisitions?
Rumors they might be eyeing potential acquisitions of distressed uranium assets globally.
Using that war chest.
If they use that $700 million war chest to snap up capacity while the cycle is still turning bullish, it would just cement their position as the dominant Western producer.
And finally, the political angle, government help.
Absolutely. The recurring rumor, you can't ignore it,
Sure.
of forthcoming U.S. or maybe Australian government subsidies or grants for critical minerals production.
Makes sense politically.
Governments worldwide are prioritizing energy security, domestic sourcing. If policymakers step in with significant financial support,
Energy fuels would benefit.
Massively.
Yeah.
As a diversified critical material supplier, they would be a direct beneficiary across both uranium and rare earths.
Okay, so the investment thesis overall sounds bullish. We rated it, 8.5 out of 10?
Yeah, 8.5. For short-term traders, the focus is totally on that November 6th earnings call.
Yeah.
Betting on a monumental beat.
But for the long-term investor?
For the long-term investor, the thesis really rests on their unique strategic multi-resource moat.
Right.
And those massive macro tailwinds. Global decarbonization, national energy security. This stock is positioned to be a key infrastructural player for, well, the next decade.
That really is the essential takeaway for you, the investor. Energy fuels is currently a high-growth speculation play. It's trading well above analyst targets. It's burning cash. But it's underpinned by control over resources that are absolutely critical to the future of energy security. The real question is, do you trust this management team to convert that $700 million in newly raised capital?
Which carries that inherent risk of future dilution.
Right. Convert that into profitable, diversified rare earth and uranium revenue before the momentum potentially shifts. That's the calculation you need to make before November 6th.